Welcome to Subramani. Trading data and investing data is easier to get from US than to get from India. I don't know from where I can get this kind of data, but the eToro brokerage account, the brokerage company has reported that in 2022 the number of short positions opened has been 61% more than the whole of 2020. Remember, 2020 was not a great year, and now it is 61% more, and it is 41% more than it is 41% more than 2021, about 60% more than in 2020. Right, the sentiment is or it could be a little wrong, but the number of short positions opened today is much higher than it was in the past. So it's a great indicator that the markets are likely to go south. That's what the indicator looks like. But the PE is not at an all-time low, and interest rates are not at an all-time low, right? Interest rates are actually on the way up. So those are two things which show that, which gives you a feeling that the market may not be in a great hurry to go up. But the thing is, so many people have gone short. So these are the same people who were given the stimulus checks and used those $600 checks to buy up the market, and market was on a huge bull run. And the interest rates being low and being lowered and coming to zero was helping fuel the market. Is this a time to be going short on the market? I don't know whether you are capable of doing that. You have to have tremendous amount of experience, good control over your ego, and fantastic turnaround times, right? So this is very important to take a decision that I've come this far, now I will not go. So let me give you an example. So if you are trying to reach the Himalayas, Everest, you reach a particular place, then you realize you got oxygen for another 5 minutes, or maybe you got oxygen for another 15 minutes, and it's a 5-kilometer walk that you have to still go, and there's a long queue. So it may take 5 minutes, it may take 7 minutes, whatever. You have to plan for enough oxygen for going and coming. So you got 5 minutes going, you got maybe 7 minutes coming, and you have to reach a particular place where the need for oxygen is not so high. So in this excitement, you might take more shallow breaths and use up more oxygen. So you have to plan everything and make sure that you don't die, right? In a mountain expedition, that's very important. Exactly like that. In an investment, you have to make sure that you don't die, you don't run out of money, you're not wiped out of the market, because going short, especially directly in the market, which means you have to buy the shares, give the delivery when the delivery is due, and that's the way to go short. The other way to, of course, is to buy put options. And in the US, you have some ETFs where you can invest, which could be long short, it could be pure short, or it could be leverage short. In these funds, you will make money. So when I'm saying the amount of money that is coming into these funds, I got that figure also somewhere. I think something like 5.8 billion or something is what the short funds have collected. I'll just look for that ETF. No. I can't find it, so I'll just skip it, sorry. So I find a lot of people with sentiment with saying, oh, this is a time to be going short. Young retailers trying to go short in the market, it's not going to be very easy, right? So, and in India, unfortunately, you don't have ETFs which will help you go short, or ETFs which will leverage and help you go short. There, at least you know how much you can lose. You can lose only what you're betting. But in a real life situation where you're borrowing shares, suppose you borrow shares worth 1 crore and you paid that person something like 5 lakh or 10 lakh as interest, and you've given a margin there, right? Nobody is going to part with shares worth 1 crore without taking guarantees from you that well, if prices fall, you have to anyway replace the shares. That person is not selling it, so then they'll collect higher and higher margins. And that is getting expensive. Even in the US, it can be as high as 5% in a share where very many people have already gone short. What are the risks in going short? The risks are maybe it's too late, right? Right now, there may not be enough juice to go, you may not have enough juice to go short. For example, if I didn't like Suzlon, I thought Suzlon was a great sell at 22, 23, right? But so I didn't sell. If I could have sold and bought back, technically speaking. Now, that strategy may have worked, but will that strategy work now when Suzlon is already down to 7 rupees, right? That's the question to ask. Or anything like that. Tata Power was a great share to go short at 80 because you know it would get pulled out of indices. It went down to 30. But at 30, if you had gone short, you would have lost your shirt and pant because now it is nearer 300 than nearer 30. Right? So these kind of things can happen. When you go short, you can lose your complete shirt. So be careful about that. And understand that it's a risky strategy, and taking short positions can easily backfire, and because there are wild swings in the market. So the day you have to close position, if the market is high, you will have to sell at a loss. If you have bought put options, you will lose money. That's it. That's the only thing. But when you go physically short by borrowing shares from somebody and having paid a margin, you will lose your margin. You will have to pay more, and you will have to anyway buy and replace those shares. So that's not going to be very easy. So don't try that. We are all saying, okay, energy prices will drop, Europe is in trouble, right? So all those things could have a negative effect. Is this a market which is going to turn around and give you fantastic returns? No, it doesn't look like that. So is this a time to buy the market? I don't know. Is it a time to sell the market? I don't think so, because a lot of the real smart sellers have already sold. So if you're not trained in going short, if you do not know how to go short, going short in the market to make money is a very, very risky proposition. Don't do it. Stick to your SIPs in index funds. Thank you.